All right. So obviously we have the benefit of hindsight, like we know what happened on Tuesday. But first of all, like me normally, I just added these so you could see the time zones like more, the session zones more clearly. From 8 to 12, we got Asia. 8:30, we have New York, not open, but the New York kill zone for it seeks liquidity at 8:30. And I usually also mark out 7 too, because 7 to 8 really sometimes sets up a really great move. But you got lunch. I mark out lunch from 12 to 1:30. If you go into some of ICT's videos, he explains that really the session is from 12 to 1:30. It's not from 12 to 1. And the end of the market at 4:30. That's when we stop all trading. All right, so let's get to it. My first thing that I'll say to you is that I start by looking at price on the daily. And obviously we're in the weekly, this weekly gap right now, but I deleted it because it's too much on my chart. So on the daily, we have this untested fair value gap. And me personally, I would see how, because on the weekly, we have this order block that we have been testing. And this day we try to get to it. And then what happened, we opened, and actually let me double check what I'm saying is right. Yeah, we opened and then we shot down. And we started coming back. No, we were actually just staying in this area. We were just staying in the area on Tuesday. So Monday we went up to this wick. And if I were you, if you're really looking for that, for the high, I'm assuming you're looking for longs, I'd mark out the wick like this, because any wick is also just like a fair value gap. It's a PDRI, and I'm sure you probably know that. But if you don't know this, everything I'm saying is gonna be taught in future videos. But just starting out now, so. And the indicators, if you want, I use this is the only three that you should worry about. Power of 3, so you can see how the daily candle's forming, and this ICT kill zones and pivots. And these are my settings. You can pause it and see how I set it up. But I have the time zones matched up, and I changed the way the box look because it's more clear if I have it like that. And yeah, I changed this a little bit. I don't need the month open. I just need the daily and the weekly. And I don't really need these. I mean, you can have the opening prices on this, but I have another indicator for that. This is just so I don't have to do these lines, so I can see it myself, and I don't have to mark out the highs and lows myself. And key times, I'm gonna use midnight, 9:30 and 8:30. And yeah, those are the only three that you need. I think I gave you the settings, but these are the settings for Power 3. So we obviously didn't get to that daily on this. On Monday, we didn't get to that daily. We had a great, pretty big expansion higher. And I'm pretty sure it was on the daily. Yeah, we didn't have this gap yet. I don't think we did, but yeah, we didn't have this gap yet. And I'll look at NQ also, see how NQ's delivering. So right now we have this huge gap from where new week opening gap was. And we also have the same gap from here to here, but it's not as clear on NQ. And no obvious SMT. Actually, no. We do have an obvious SMT right here. From this high to this. Obvious bearish SMT. Yeah, I have a lot of templates, but all right, well, we know, I don't know why it looks like that on this time frame, but we know that we have a daily SMT, daily bearish SMT, and just let Asia play out. I wake up personally at 7. At 7 is when I try to get on the charts and get to work. All right, so what time is this? Right now, all right, so right now this is the Asia low. This is AS low, Asia low. And I don't know why it looks like that. This is the London low right here from 2 to 5 a.m. That's London. That's London high. Midnight also marked out. So midnight, you could look at midnight as power of 3 also. Like, see how we push up into it, above it, and midnight open, and then we start pushing down. Like on the daily. This is still on the daily. Like, see how, let me get a good example. You can look at this candle right here. This candle mark out the body high, body low, the high and the low. I would look for reversals or key trades at the highs and the lows. Like, mark it out. It could be treated as like a sweep or a setup to go higher, or if it sweeps the high first, set up to go lower and then higher. But that's basically like basic daily power of 3. And it's fractal also. It works on every time frame, everything, every session. And all right, we're going into market open. This is when I'll get on the charts. I'd see what's going on. Look at NQ for some more SMTs. I'll make it clear on here too. That's all we need for now. Yeah, I'm gonna do it like that. All right. Nothing I see in value yet, but we would mark out this high and this low as like low, as this low is definitely external liquidity, so it has a lot of liquidity built up under here. And we just shot down right to it. And sometimes, like, if it's a really big trending day, the low of Asia, the low of London, like the highs and lows of each session would sometimes act as support resistance, but that's only if it's a big trending day. And if it's not like a big trending day, it'll sweep it, and like we would sweep the low and go up right to the high, and then it would be like a small range day. But just look for that, keep that in mind. We got a bunch of highs for buy side liquidity here. I wouldn't be in the trade yet. I'd wait till 8:30. All right, that's a great push lower. I'll look for some sort of buy side to be taken. And I can't pull up dollar in here, but dollar something usually acts as inversely correlated. So if we sweep this high, then also New York lunch from yesterday, the low has never been taken, so we can use that as a form of liquidity. So since we have the power of 3, knowing that it's bearish because of the daily, we have a daily SMT, and 2, from midnight open we push a little bit above and then we started pushing down. 2 big confluences. So I would look for a setup to go short. And if you want, like once you get more advanced, you could take a setup to go long. Like I would wait for a entry on a fair value gap like this possibly, or me personally, I like entering on these volume imbalances because 9 out of 10 times it's going to be a perfect entry if you know when to enter. And got it filled here. Like if you want, you could take a long to some buy side here. And once we get above like a certain high, I'd have my stop loss like right below here, entry right here. And once we get above like this high or this high, then I'd set break even. Right there, I'd set break even right there. And my entry would be here. I'll show you what it looks like. Looks something like that. I wouldn't like go for too much. I would just target low hanging fruit. It could be this high. This looks good too. And I'd set break even. Once we get to this point, my stop loss would be at break even. And that would give you a good, like, what was that? 1 to about 1 to 3, 1 to 2 RR. But it would have been an easy trade you could have taken. And I would wait for a good setup to the downside. Like, we took some buy side out. Let's go on the 15-minute. We took out some buy side in form of this high, pre-market high. I mark it as minor because it's really minor buy side. This should be like a normal sell side. I would only mark it as minor if it's like in between a leg going down. If anything doesn't make sense, you want me to clear up anything, let me know. Yeah, you could target that pre-market high. And key thing, the number one thing that helped me from taking very little trades and very accurate trades was macros. From the last 10 minutes to the last 10 minutes of each hour and the first 10 minutes of each hour. So that's where I would look for my entry and look for a high probability trade during that macro time, any macro time for that matter. That's when I'd be looking for my setups. It's key right there. It's key. Trying to see if you have another SMT. Nothing that's too obvious yet. Yeah, we do. We do have an SMT. We got a bearish SMT. I'll look for a short. I'm gonna mark it out so it's clear for you. But if there's one main thing I would take away from what I just said there, macros, higher time frame bias, and power of 3. Number one things. Like very, very important things. It's gonna help you it's gonna help you make very little losses, and what the risk management I just taught you, it's gonna stop you from losing a lot of money, like hitting drawdown, like you said. Once you get above like that high right there, I would set break even on the fair value gap I entered. And sometimes you could put it below a swing low, like if you really think that it has room to work it. Like if this does decide to go back up and get rid of the SMT, go for more buy side, then you could have a little stop loss. But for me personally, I'm fine hitting break even. It's annoying, but would you rather have be annoyed from hitting break even, or be annoyed from being in drawdown? You know. And at this time, I'd be looking for a first presented, but there's nothing really too obvious. Like, it's an intermediate high too. Swing high to the left. Swing high to the left. Higher swing high in the middle. Swing out to the right. It's an intermediate high. Intermediate is like, if it's a downtrend and price makes an intermediate high, that high you don't want to see get filled in. It's either what I said, like obviously on higher time frames it's more powerful, but lower swing low to the left and a lower swing low to the right, and higher swing low in the middle. you wouldn't want to see that high get traded back to, or I would wait, just sit back on the sidelines and wait for your setup to form. Or it could be like, on the 5 minute, it should be clear. That's one form of an intermediate low. And okay, so you see this. Yeah, all right, I'll use this. You see this bearish for value gap. Say price didn't make that candle. Price made a candle that only looked like this. It stopped. It wicked that low right there, and it went down from that range. It just stopped. It filled in that entire range. That's an intermediate high. That high it made, and once if it trades above it, then we're gonna see higher prices like we did here. You should write down a lot of this stuff. Now I'm saying it's like, oh wow, that just pushed. All right, well at this point, we double swept that low. We're obviously in a downtrend. Have a bearish bias, and is that first presented? I think it is. Yeah, that looks like first presented. And guess what? We're in a macro. If there's a volume balance, include that into the fair value gap. And if there's a volume balance on both sides, it's not called a fair value gap anymore. It's called a suspension block. In this case, it's only a fair volume balance on top. And if it does leave that open, say you don't take a trade on the volume balances because you really think it's a very strong like trending day, and it leaves it open, then at that point I would just take entry on the fair value gap, and I'll have my stop loss right above here. And this is kind of in the way. I'm gonna get rid of that for now. And we have a bullish SMT, so at this point I'd wait. Yeah, I'd wait. Nothing's too clear right now. Yeah, see, if you took a trade off that, you would have got like wrecked. Like that's why I keep this on my chart, so you can look for things like that. This made a higher low. This one made a lower low. This is the first presented I'd use. I'd wait for a setup during the silver bullet hour to help me get a good trade for a short. All right. So now we have another bearish SMT. Now I would be very interested in shorts. At this point, I would really just try to get an entry because I can't go on. I don't think, oh, I can. Okay. So once you see price close above like this, close below like this, or close something like this, and it's starting to respect the halfway point, I would try to go short anything below the anything in the bottom half of the first presented. If price, like say you see price close right below, it disrespects it. Since like I'm on replay mode, it doesn't like really show too great price action, but like sometimes skips like it just did. I would have my trade looking like this. I'd enter on, like, you could have your limit on the midpoint, or you could just like go on the 15-second. There's definitely like something you can enter on. Like, see that fair value gap? I'd enter on that fair value gap. My stop loss is gonna be right there. Because if you get stopped out and price goes in the upper half, then that trade's not even close to being probable. Like if it gets in the upper half and you're bearish, it's very probable that you're on the wrong side. Let me push this out. And like I said, remember, once we get to this low or this low, then I would look to set break even. I think we might have a SMT, another SMT. No, we're good. We're good. Yeah, we're good. All right, this point, wait. At this point, I set break even. I don't trail my stop loss. I don't trail my stop loss unless it's like a very big trade. Then I would start trailing it. Like, and I have multiple contracts. I would take one off here, and have my second right there. Yeah, this, I could see why like people would lose money on this. Like, it's not a very good like clear day. finally, during the, and like I said, silver bullet macro. What happened? The trade was right, perfectly, and perfect entry right in the silver bullet macro, 950 to 1010. Like I'm telling you, so many people don't realize this because not many people talk about this, but if you look for your main setups that you want to take, and you only need those 2 setups for the whole day and you're done. Look in the macros for the setups. Don't look for some bullshit. Oh, you see maybe a sweep and you're going to go long. What happens if you go long here? Stop loss gets hit and then you see, oh, I missed the trade. I should have just looked at ES, or I should just pay attention more and saw there was an SMT that I could have just not taking that loss or taking that trade because it wasn't during a macro. I guess it kind of was, but if you had the SMT there, bullish SMT, what would give you the confidence for a long there, knowing that your daily time frame, higher time frame is bearish? And right there, I'd be done. Solid. I don't even know how much risk to reward. Let's just say it's like, I don't know. You could figure it out. It's pretty good risk to reward on that. New York lunch low from yesterday hasn't been taken. Boom, just got taken. We didn't even need to know that was a fair value gap there, right there. That form is right there. And I'll be done at this point. I'll just watch to see how price forms. Price swept the low of lunch. It honestly looks like a good long. But I wouldn't even touch anything else. See? Like, I would not even touch this. I'll be gone. And I hope this makes sense to you. If you have any questions, just let me know. And also keep in mind, getting break even on a trade, hitting break even. If you hit break even, wait for another setup. Don't just re-enter, just wait for another setup. I hope this helped.